Welcome to Arizona Sonoran Copper Company's live summit today, hosted by Six. I'm pleased to introduce our speakers for today, President, CEO, and Director George Ogilvie, their COO, Ian McMullen, as well as their resource geologist, Anthony Botrill. The team's going to walk us through their latest news, and after, we'll be accepting questions live. So as a reminder, you can submit your questions using the right-hand tab, Q&A, found on your screen at any time during today's presentation. And as always, this event is being recorded, and it's going to be available on Six.com afterwards. Without further ado, George, I want to pass things over to you to get us started.
Thank you, Cam, and thank you for the opportunity to speak here today. So it's Arizona Sonora Copper Company, and the title of our presentation is Copper Invest in Sustainability. Obviously, we have some forward-looking statements, and this presentation will be on our company website, so I'll draw your attention to the cautionary language. As far as the share capital structure is concerned, today, 89 million shares issued, fully diluted 99 million, and importantly, the company is debt-free and has a very clean balance sheet. Today, the company is sitting with $28 million US in the bank, and we're well funded through until the summer of 2023. We have 5 analysts actually covering the company with a target price of $2.75 up to $4 Canadian, with a consensus price around $3.07. And of course, we've been on the show before, and everybody's very well aware that we have a large strategic shareholder in Tembo Capital, and obviously recently Rio Tinto put $10 million US into the company and as a 7% shareholder. So we just recently announced this morning a large resource update coming from Park Salyer, which is an exploration property 2 kilometers southwest of the main Cactus project. Today, that takes our global resource up to 6.5 billion pounds in all categories. That's broken out with 1.6 billion pounds in the indicated resource and 4.9 billion pounds in the inferred resource. As everybody knows, we put out a PEA in August 2021. Within that PEA, we used a copper price of $3.35 to run the financial and economic model, and it gave us an NPV after tax at that time of $312 million US and an IRR of 33% after tax. Of course, the key thing about this project is it's located all on 100% controlled private land, meaning that there is no federal regulators involved, and we're only dealing with the local state and local municipality. I think we've all just shown this morning through these results, which we're going to discuss in detail, that the project now is beginning to build some real scale and size to it. And of course, we still have considerable targets on our property still to drill, and we believe over time that we can further add to the 6.5 billion pounds of copper that we have in the ground at the Cactus project. Everybody knows where the project is located, but just to recap, we're 45 miles south of Phoenix. Phoenix has a population of 4.5 million people. We're 75 miles north of Tucson with a population of 1 million people. We are 3 kilometers west of the city of Casa Grande with a population of 55,000 people. And we have a very strong social license, a lot of support from the local community to see this mine go back into production. Obviously, we're at the intersection of 3 of the main copper porphyry systems in Arizona. The site is serviced with electricity. The main power line runs right through the site. And of course, Interstate 10 and the Maricopa Casa Grande Highway are right on our southern border. So the area is very well serviced, and we have access to a large labor pool when the mine goes into construction and development and ultimately commercial production. So this is a new graph that we've put inside our corporate deck. Since we acquired the project in late 2019, we've grown the resource from what was the surface stockpile at only 225 million pounds, as we said today, to something in and around 6.5 billion pounds of contained copper in the ground. And when we actually look at our discovery cost, i.e. the amount of money that we've put into exploration and the amount of pounds that we've generated, we're actually generating those pounds based on a discovery cost well below 1 cent per pound of copper in the ground. So I think what it says is that investors in the company have definitely recognized a return on their investment through the exploration success. And we believe over time, as we de-risk the project, and obviously we move it through the technical studies and the final permitting, the shareholders of the company are going to realize some significant returns when we put this into production. I'm also happy to report now that at £6.5 billion, and we look within the global US of A, this project now ranks number 4 as far as scale and size is concerned, with only Santa Cruz at £10 billion, Rosemont and NorthMet slightly larger when it comes to size of deposits. Everybody's very well aware of our land package, 4,800 acres. The beauty of this resource that we've put out this morning is Park Salyer will be an underground mine. That therefore means that the amount of capital development and waste rock we have to move will be much less than the open pit. And at the same token, the grades are significantly higher than our other assets on this site. The good news is that our current land package will accommodate the mining of mineralization from Park Salyer, including the leaching pads and the ultimate rock storage areas. So we're really in control of our own destiny. And of course, since we last spoke, Ivanhoe Electric has IPO'd their company on the New York Stock Exchange and continue to drill immediately south of the Cactus project. A little bit on the permitting, there's been a slight change here. With the deferment of the pre-feasibility study being pushed out 12 to 18 months, we'd originally said that we were only going to submit the next set of permits once we had a line of sight on that pre-feasibility study. Because that's been delayed, we've discussed internally, and we now believe that before the end of the year, we will be making submissions for the industrial permits and the mined land reclamation permits. The thinking there is that by sometime in the summer of next year, we should be in possession of those permits, recognizing that there may be an amendment required. But from a de-risking event, we believe that the market would look upon that favorably if we already had the main permits in hand, recognizing that there was only an amendment required. Anthony?
Thanks, George. So what I wanted to highlight here is just the global mineral resource for the company. And with our latest release, we're really seeing a big uptick in the inferred resource, which has now grown to 4.8 billion pounds. And 2.9 billion pounds of that is coming now from Park Salyer, which is located in the southwest of our property. The other thing to highlight about that new resource is a significant amount of it, 2.4 billion pounds, is actually coming from our leachable materials, and in particular the enriched material. The good thing about Park Salyer as a resource is that it's significant in terms of thickness and in grades. And so what we see is that it's a resource that's very sensitive to copper price, or highly leveraged to copper price. So you can see on the chart on the left there a fairly straight line between changing copper prices. So what we find is that we're highly leveraged to a good increase in copper price. On the downside, if copper prices were to remain low or reduce, the grade of the deposit will then come into play. So it's an exceptional resource from our perspective in terms of its thicknesses and grades and that leveraged copper price. I just want to talk a little bit about the upside to the property. This is a grade thickness chart, so it's the copper grade times the vertical thickness of intercepts in the drilling. And so all of our work to date had been on Cactus East and Cactus West, and just recently we've done significant work on Park Salyer to the southwest. I think the thing to highlight there is you can see in the grade thickness the scale of Park Salyer. And you can see that rather than being two bodies that have been offset by faulting, Park Salyer's remained as a single body of mineralisation. The other thing that we find in the resource that the grade thickness is showing quite well is that the thickest mineralisation and high grades are actually on the eastern side of the resource. So where you can see on the eastern side of Park Salyer, that real bullseye of highs, we're seeing very thick mineralisation, 500 to 600 feet thick. In terms of exploration, what we have, when you line these up, we have what's called the Cactus Mine trend. And so we see this trend to the northeast of high-grade material. And so right in the very northeast corner, we have the northeast extension. But what we also have is between Park Salyer and Cactus West, really good upside to find more material. A lot of the drill holes that were drilled through that area that come onto this grade thickness map were actually stopped prior to mineralisation, or they'll terminate in mineralisation. So the grade thickness map gives us indications that it continues through this zone, but it's not well tested to date. There's been very sparse drilling. And then this slide's really talking about the direction of how we're moving forward. So as you know, we have the Cactus Mine PEA, which is an 18-year mine life. By putting out this latest resource on Park Salyer, we need to step back and rescope now to add the Park Salyer into that full project. But there's other work that we're also working on in terms of the upside. So we have a lot of primary material, particularly adjacent to and below Cactus West, but also coming into play with Park Salyer. And so the Newton test work that we've started working on will hopefully give us the optionality to start looking at that primary resource and how we can utilise that. And then on top of that, as I said, we have things like the northeast extension and that Cactus Mine trend that we need to test for exploration. So our immediate priorities, we completed the resource, but we actually stepped straight into infill drilling on Park Salyer, which is 250-foot drill spacing. So the inferred resource that we put out was on 500-foot drill spacing, so we're halving that. That's about 100,000 feet, and we expect to complete that around the end of the year. On the Cactus Deposits, both Cactus East and Cactus West, we're infilling to what we expect will be measured with 125-foot drill spacing. That's another 60,000 feet. And then there's another 12,000-foot program that we're planning that really tries to expand some of the local resources around Cactus, particularly with the Newton test work technology in mind. And so that drilling will come on later on in the year. And so I'll pass it over to Ian.
Yeah, thanks, Anthony. The chart in front of you is actually data that we put out an updated PR for metallurgy back in February. What we're trying to articulate here is the ongoing work that continues with respect to metallurgy and understanding, the deposits as they sit and how they can be maximized from a recovery perspective. So the work you see here obviously is Cactus related. We did some test work as part of the PEA, and then the column tests continue to be updated as we sit here today. But the important piece here is we're parlaying that data from Cactus and its ongoing results to Park Salyer met testing, including preliminary bottle roll testing, as well as the full-on columns that are the benefit of this work here. So exciting times when we announce a new resource today, but now we have a whole suite of work to do to understand it and continue to move forward this important piece of the project. So stay tuned on that. So we go to the next slide, and it just really a segue into what we're moving on to towards next. So as you can see from a complete sort of point of view, We completed a Cactus MRE back in early 2021 ahead of the Cactus PEA, announcing the Maiden Park Salyer MRE today. So, armed with all that and the work that continues, what we're trying to do now is rescope the project such that over the next 12 to 18 months, we integrate Cactus with Park Salyer from a mine design and technical study point of view to see if we can extract the best synergy possible within the mine site. And of course, alongside that, as Anthony's mentioned, Rios Newton work continues. They have their own set of columns that will test alongside of ours. And that work will, that work is early days, but obviously if something looks good there or it comes to pass that it can be applied to the site, there's additional sort of negotiation and whatnot to see that through. So, the next steps really are that ongoing metallurgical program, obviously the permitting that goes with a change in the site, if you will, potentially, all the mine design and scheduling that goes with it. And then, subject to the next set of technical studies, we have a project financing. We always have to consider that, all ahead of a construction decision. So, this 12 to 18 months now that we have Park Salyer lined up and alongside Cactus will be critical for the site.
Thanks, Ian.
Sure.
So when we look at the project now on an enterprise value per pound of copper in the ground, currently the company has an enterprise value of only $65 million US, and we derive that from a market cap of approximately 95 million. We've no debt, and we have $30 million US cash, approximately $30 million US cash in the bank. And when you look then at 6.5 billion pounds of copper in the ground, essentially at the moment, the company is being valued at 1 cent a pound of copper in the ground. And we can see our immediate peer group, Ivanhoe Electric, who, as we saw earlier, were on our southern border with the Santa Cruz property. They're currently being valued at 5 cents enterprise value per pound of copper in the ground. And the market cap of that company today is approximately $800 million US. So we think over time, as we can continue to de-risk the project through the technical studies, through the advancement of the permitting, and ultimately show the market in the next 12 months through a rescope PFS that Park Salyer is extremely accretive and value additive for the shareholders of the company, we ultimately believe that the company should see a re-rating. Of course, these markets are not particularly good in general. However, we do know that we are in a cyclical industry, and over time, obviously the markets will turn and the focus will come back to copper, and there's going to be a hell of a lot of upside for the shareholders or potential investors of this company on a go-forward basis. Thank you, Alison. And when we do a little bit of a peer comparison benchmarking against our immediate peers, you can see, as I said, we have Ivanhoe Electric, we have Sonoran Mining, we have Filo, and we have Marimaca. The nice thing about this new maiden resource on Park Salyer, as I said earlier, now bringing us up to a global resource of 6.5 billion pounds, it starts to really put us in the same sort of size and scale of some of our immediate peers. So Ivanhoe Electric, 10 billion pounds, Sonoran, 2.5 billion, Filo, 8 billion, and Marimaca, 2.5 billion. So we're definitely up there now as far as the scale is concerned. And if there was one criticism that I've heard since joining this company 18 months ago, it always has been that the project lacks scale. And I think with today's announcement, you're going to see over time, as we complete the engineering studies, that we're going to actually start to build that scale in to the mine plan and obviously the financial and economic models of the company. Thank you, Alison. And then when we look at on a price per times NAV basis, you can see all of our peers and ourselves have come off quite substantially in the last 3 months or so with the melee in the market. But we're still only trading at 0.37 times price to NAV, and that's about 10% below where our current peers are actually sitting. So to recap, we believe that longer term, the fundamentals for the copper market still remain extremely strong. Indeed, I would argue that given the drive for decarbonization and the energy crisis that we're seeing in Europe, there'll be even more incentive there to move towards green energy much quicker and sooner than what was anticipated, which will drive up the demand for a lot of the green energy commodities, including copper. As you've seen, we've got a very tight share capital structure, and we're well supported with Tembo Capital and having Rio Tinto involved in the company as a strategic investor, plus access to their technical team is obviously hugely advantageous for the company. You've got a very experienced leadership and management team here that have a proven track record of creating significant value for the shareholders of the company, and there's no reason to believe that we cannot repeat that with Arizona Sonoran. We're in a fantastic tier 1 jurisdiction, access to water, permits to take water, a brownfield site minimizing future capex, and of course, as we said earlier, private land with no federal nexus and only dealing with state and local municipal authorities. We've just added some significant scale to the project, which we think over time will be extremely accretive for the shareholders. Based on the PEA, obviously robust project economics. And when we come out with that rescope technical report in the next 12 months, there's no reason to believe that we won't be seeing robust project economics at the same time. Low risk as far as the permitting framework is concerned. And certainly, I think over time, once we can further de-risk the project, there's certainly a lot of synergies in the immediate area, as you've seen on the project, and certainly M&A activity certainly could heat up within the sector over the course of the next 2 to 5 years. So that's the key highlights and summary of the project. I'm going to stop there and hand back to Cam, and we'll open up the conversation for some Q&A.
Thanks, George. Great presentation, gentlemen. With that, as George mentioned, we are entering into the Q&A portion of today's summit. So please make sure that if you have questions, you ask them in the Q&A tab found on the right-hand side of your screen. We already have a couple questions, though. First one from Joe. What do you attribute the higher leachable and primary grades at Park Salyer versus Cactus?
Anthony, maybe you want to take that one on?
Yeah, I can speak to that. So the higher grades that we're seeing at Park Salyer, particularly in the primary, are actually consistent with what we were seeing in Cactus East. I suppose the difference at Cactus East is that we don't actually, because you have a basement fault that's cut out the mineralisation, the bulk of the primary below Cactus East is being cut out. So we're not actually seeing that high grade. There's a very small amount of it. But in terms of what's driving that primary grade, it's that we're in the potassic and phyllic alteration. And with the intrusions of the porphyries, we've had really good ground prep for dissemination of mineralisation through that brecciation. So that's really what defines that mine corridor, and that's what for Park Salyer is giving that higher grade to the primary. That's then being upgraded with the enrichment at Park Salyer, and particularly it's the being in the right alteration zone in the potassic and phyllic that's really driving that increasing grade, particularly with the good ratio of pyrite to chalcopyrite through that zone.
Great, thank you, Anthony. Follow-up question: could you comment on possible synergies that could exist with the neighboring Santa Cruz project? There seems to be some confusion about how much of their project area is on private versus public lands.
Yeah, well, I can take that one on. I mean, obviously from their public document, which was part of their IPO, they've indicated that they will be looking at both a flotation and a leaching process. And of course, at this juncture in time, we are only looking at a leaching process. So certainly there could be some natural synergies there, given the close proximity of the operations that, if we got into production first and we had a heap leach operation with an SXEW, it would make perfect sense to potentially look at processing maybe material from Ivanhoe Electric that was leachable. And then, on the opposite side of that equation, we have primary material. Obviously, we're working with Rio and the Newton technology to see if that material could be leachable, but it is a new technology which is unproven. And of course, we do know a chalcopyrite can be processed through a normal copper concentrator and a flotation process, which Ivanhoe Electric has indicated might be amenable to some of their ore. So there's the potential that maybe they put in a primary a concentrator on their property, and they've got the ability to take our primary sulfides. So that to me would be one potential synergy that I think over time, as the companies advance their projects, should be explored, given the close proximity of both projects.
Absolutely. With the size and grade of the park's Salyer resource, does this shift the center of gravity with respect to the development in this area versus Cactus?
Ian, perhaps you want to take that question on?
Sure. There's a short-term and long-term answer to that question. I mean, in the short term, we have shifted the center of gravity, as Joe stated there. But in the sense that we've moved on to the indicated portion of the drilling program, because we need to bring that resource confidence up. And then, obviously, alongside that, we continue our technical work, including mine design and that sort of thing. So there's going to come a point in time down the road, or a little longer term, where we start to put all that together versus Cactus to see what makes sense from a sequencing perspective, and what comes first, so to speak, and how that feeds into things like leach pad size and SXEW size and things of that nature. So yeah, at the moment we're obviously focusing on that infill drilling, but there'll come a time where we mesh the two technical streams, if you will, and really via scenario analysis try to understand what makes sense, what makes the best sense for the property.
Right. Okay. Joe wants to know, given the push for critical minerals, albeit copper is not considered it in the U.S. at the moment, does that open up funding alternatives from the U.S. governments similar to other minerals?
I think it does. I mean, obviously, there's various groups in the U.S. which are lobbying the U.S. government, and Robert Friedland himself, Ivanhoe Electric. It's one of the reasons why he's invested so heavily in the U.S. now with the Santa Cruz and the Tintic, property in Utah, that he believes ultimately copper will be a strategic metal and will be highly sought by the U.S. government. So, yeah, I think over time it does.
Okay, fair enough. What's the likely mining method for the park Salyer?
So, I mean, very early days on that. There's no doubt, some sort of bulk mining method, especially if it remains underground, which it likely will, would be the order of the day, so to speak. But again, we just hired a senior engineer to start doing some of that work internally, and then once we're in a position with the updated resource, we'll hand over the work sort of we've done to a consultant and work alongside a consultant to understand what makes sense and what fits best for that ore body.
Oh, fair enough. Are there any discussions going on regarding the source and price of acid for the SXEW process?
Yes, those conversations have already taken place. I mean, obviously, we were driving towards a pre-feasibility study purely on Cactus. Of course, we recognized several months ago that Park Salyer would not be included in that report, yet it could be quite material. So we basically, as we've announced this morning, we deferred that PFS giving ourselves the opportunity to build in a Park Salyer and potentially even the Newton technology if it were successful. But as part of that PFS process, we did go out for quotes on sulfuric acid. Obviously, you know, it was at a time of high volatility and a lot of uncertainties, and we were looking for sulfuric acid prices not today, but, 2 to 3 years out. So the PEA had $120 a ton associated with it in 2021. Today's sulfuric acid prices are north of $200 a ton. And within our PFS that never went to market, we were anticipating around about $170 a ton would be the operating cost for the sulfuric acid. And interestingly, that number actually paired up quite well with the Hud Bay PEA on Rosemont, where they had $170 a ton as their operating costs for sulfuric acid. So we definitely felt that the number we had quotes on and we were using was appropriate. Of course, all of that will now have to be redone when we redo this PFS in the next 12 to 18 months. We'll have to go out and get more market quotes at that time.
Absolutely. Joe in the audience, says that he believes Newton is a proprietary tech of Rio Tinto. How do you discuss that in a technical report?
Well, we're going to have to obviously get our QP very comfortable with the technology. And as Ian sort of alluded to earlier, the physical column tests with the leaching with the Newton technology are in the process of starting up. And we saw within the computer modeling that it was anywhere between 200 and 220 days of leaching time was predicted before we sort of got up to a 75 to 80% recovery of the copper within the chalcopyrite. So once those physical column tests actually do start, we'll be bringing our QP in sort of under the tent, and he'll be working with ourselves in Rio to get very comfortable with the technology. And, hopefully, at some point in time, if we see promising results and we can actually build that into the technical report, then obviously the QP has to be comfortable with that and sign off on it.
Okay, fair enough. What's your cash position currently, and are you raising money in the short term?
Yeah, as I said in the presentation, our cash position today is we've got slightly north of $28 million cash in the bank. And thankfully, we don't have to come to market and raise any money at this juncture in time.
That's great. Could you comment on the water rights at Cactus, and are they transferable to Park Salyer?
Ian, you want to take this one on?
Yeah, because the site is considered the Cactus site, with multiple ore bodies on it. It's definitely water confined within the property. So therefore, transferable, I guess, if you want to use that term, between each of the ore bodies. So, as far as the water rights we have, I believe we published this last year, but we've received approval from the ADWR to access 3,600 acre feet per year over a 50-year period. So it's a lower aquifer. The water is heavily impacted by metals, not from previous mining, but from basically geology in the area. So the water was deemed for industrial use only. So we're able to tap into that allotment. So that's available to us.
I think the other key thing there, Ian, is that when we do our water balance, both within the PEA and the draft PFS, we were only actually using about 1,200 acre feet per year of the 3,800 acres in totality that we have available. I suspect that may increase with Park Salyer coming into the plan, but ultimately I believe we will have excess water rights that we won't be fully taking advantage of. And as Ian already pointed out, those water rights are transferable. So coming back to the question that was raised earlier about synergies between ourselves and other projects in the immediate area, there certainly could be opportunities there as well.
Oh, fair enough. Absolutely. Can you talk to us about upcoming catalysts for the company in the next 6 months?
Yeah, well, I mean, obviously, as Anthony's described, we're continuing with the infill drilling at Park Salyer. So I think between now and the end of the first quarter of next year, we'll be getting all the drill results back from the assay lab. So the market should expect infill drilling results over the course of the next 6 to 8 months. With those column tests starting up on the Newton technology, I would probably expect that some juncture towards the end of the first quarter next year, with the columns running at least 6 months, we'll probably have some preliminary indication of how the Newton technology is performing in leaching the chalcopyrite. And obviously we would have to clear this with Rio and Newton, but if there could be an opportunity, obviously, then to release some preliminary results to the market in the first half of next year. And then our plan as well is to go back to infill drilling at Cactus East. That's part of moving the indicated resource into the measured. And some of that material obviously could then go into the rescope PFS and ultimately a bankable feasibility study as a proven reserve. And assuming that, our budgets are approved in December, I think there'll be some monies that will get allocated to further exploration around the site. As Anthony's alluded to, that northeast corridor from Park Salyer heading back to Cactus West is still to be tested. The primary sulfide below the open pit still has to be fully tested to the bottom of the basement fault. And then, we've got that northeast extension where ASARCO drilled a couple of holes. They had the copper porphyry system. They walked away from it, however, because the mineralization occurred at least 1,000 feet down the hole, and they weren't looking for an underground deposit. They were interested in near surface mineralization, and hence the reason why they walked away. So there's be a lot of positive news flow, I believe, coming from the project over the course of the next 6 to 9 months.
All right, gentlemen. Well, thank you. That was a great presentation and another great Q&A session. That is all the questions we received for today. So with that, I'd like to thank not only you for coming on, but also everyone in the audience today, especially those who did ask questions and participate. But before we wrap up the day fully, I want to pass things back to you just for some closing remarks.
Yeah, thank you, Cam. Appreciate that. Well, again, thank you, everyone, for joining us here today. I think the results that we've put out today from Park Salyer are exceptional. We believed when we initiated this drilling campaign in late December last year that based on the geophysics and the sonic soil sampling, there could be upwards of 3 billion pounds at better than 1% copper in the ground. And I'm very happy, obviously, to report that the project management team, including the exploration team, have did a great job in coming in right at the top end of that range. And I'm sure everybody recognized from the slides that there's still a hell of a lot more exploration potential on this property. Obviously, the markets aren't cooperating at the moment, but my message here today would be think about the long-term fundamentals of the copper supply-demand curves. And when you start to look out, 5 to 10 years, the supply is just not going to be there with respect to the demand as we've discussed through the presentation. And I believe that the only way supply can have any chance of, keeping up with demand is through incentivization, through pricing. And that ultimately means that the copper price and some other commodities that are associated with the green energy sector are going to have to go a lot higher in order to incentivize, projects to come into production, and also to keep some existing mines actually in production where grades are diminishing, costs are going up, marginalized ore just can't be mined profitably, and through incentivization of price is the only way supply is going to keep up with demand. And I think, for people who are invested in the copper sector and pick the right projects, their long investment in the longer term is going to be significantly rewarded. And Arizona Sonora Copper Company is going to be one of those projects that creates significant returns for the shareholders of the company.
All right, George. Well, with that, thank you very much for coming on yet again. And with that, we will be wrapping up, though. So I hope you, your team, and everyone in the audience has a good rest of the day. Cheers.